Hello and welcome to this Mirror Facebook Live, all about rising inflation and what it means for your bills, supermarket shopping, savings, pension and more. I'm Sam Barker, a money reporter at the Mirror, and I'm very grateful to be joined today by the Mirror's head of business, Graham Hiscott. Hello, Graham.
Good morning, Sam. Hi, everyone.
So we're going to be talking about what's going on with inflation, the big news there, what's going up in price, what it means for your money, and also a little bit about what you can do about it. We're going to be breaking all of this down for you today, including what to do if you're worried about rising costs and some of the help available. And it's not all bad news, which we're going to get into later on in the call. But we're also here to answer your questions. So if you have anything you'd like to ask or you just want to have your opinion heard, please feel free to post it in the chat. We'll do our absolute best to answer both during the session and towards the end. So let me start by explaining the big news. Yesterday, the Office for National Statistics put out figures showing that UK inflation has climbed to 9.1% in the 12 months to May. And to put that in context, inflation is now at its highest level since March 1982, so that's a 40-year high. So let's just break that down a little bit and explain what that means. Graham, what are we talking about when we talk about inflation, please?
Yeah, well, inflation is a measure of goods and services. So it's everything that you might buy, what my household might buy. So it's everything from sort of petrol through to well, depending on the measure of inflation. Sometimes it also includes things like mortgage costs, but it also includes things like food, and the biggie at the moment is energy as well. So it's a measure of how much more. It's the rate of inflation is basically how much things have gone up relative to a year ago. So as you say, Sam, when you talk about 9.1%, that's how much across all that basket, as they call it, of goods, how much more it costs than the same time last year.
Absolutely, and yeah, 9.1%. Yeah, sometimes when we're sort of throwing these kind of numbers about the Office for National Statistics is bringing things out, they're not always very good at putting it in context. And the way I like looking at that 9.1% figure is if something cost £1 a year ago, this is very, very rough. If something cost £1 a year ago, you're looking at something. Yeah, the same item 12 months on would cost £1.09 effectively. So it's actually a huge kind of increase, and some things will have gone up in value by more than that. Obviously, things like energy bills. Some things may even have fallen. But what we're talking about is that overall the cost of living is going up, and we've got one big figure on that, and that's inflation, 9.1%. So and why is it that inflation is going up? So the Bank of England say, we'd quite like to keep inflation at about 2% a year every year. We think that's a nice kind of steady figure. Why are we seeing this enormous increase in inflation?
Yeah, well, the big factor, the big driver is energy bills. I mean, that's the one that's been the big driver really throughout the start of this year, and it particularly hit in April when the price cap, so that cap which polices how much about 23 million households, how much they pay for their energy, that went through the roof, went up by 50 odd percent. So that's the main driver why inflation has gone up so much. But it's not just that. As I mean, anyone who will be tuning into this will have their own experience of what's gone up. I mean, if you're a driver, then you will have been wincing every time you fill up the car. I mean, it's just a punishing increase in the cost of diesel and petrol, and that links back to the cost of oil, and that links back to the war in Ukraine, although it was rising before that. So lots of global factors, basically loads of global factors are to play here, and that's also why energy prices have gone up. They've gone up on the back of higher wholesale costs. That's also the reason why food prices, again, last time you went to the supermarket, everyone is noticing how much the cost of weekly shop has gone up. And maybe we'll move on to where these things are going to go. But certainly on food prices, the talk is that you ain't seen nothing yet, and there's going to be a lot more inflation when it comes to food coming down the line.
I mean, and that is scary. And I think that there was separate. So just to make things slightly more confusing when it comes to inflation, there's more than one way of measuring it. And but I think that there was a report out from some sort of analysts earlier in the week, and it said that we're currently paying around £380 a year more just in food costs. The average household paying £380 a year more in food costs. So the fact that it could go up even further, I think is quite worrying, and something that we've also started to see happening, which I've never seen happen in all my kind of time as a journalist, is a lot of supermarket chief executives coming forward and saying, this is the impact that we are seeing at the checkouts. People setting a £30 limit, for example. This is something that Asda's seen quite a lot. People will say, I will only spend £30 this week, and whatever it is I buy, I need to cut my cloth to meet my circumstances.
Yep.
But obviously, maybe the quality or the amount of food which you might be able to purchase for that is, is going to be increasingly squeezed. So I think it's quite worrying times, and we'll get into a little bit about, what's likely to happen with the future of all of this and what households can expect. So, let's also talk a little bit about, what's going up the most, because inflation is one headline figure, 9.1% over 12 months. Obviously, there's an awful lot of stuff kind of bubbling along under the surface. Obviously, as you said, energy bills are a huge kind of increase to inflation. But when we break it down, what are some of the things which are really pushing inflation up? And what are the things where the costs are really rising the highest?
Well, it's so we talked about, this mythical basket. I mean, actually, it includes things like, energy is definitely in the last month. Energy, gas and electricity was still the main driver. Something like 20, it went up by something like 20%. So the sort of the spillover from the price cap was still having an impact last month as well. Food bills were going up by about 7%, so actually sort of less than the headline rate. Although again, there are forecasts that rate, that sort of 6.7 as it was, could reach something like 10, 15% over the summer. The other ones, although you couldn't fit it in a basket, certainly, is things like second-hand car prices. That also fits into this basket of goods, and the price of second-hand cars has been rocketing. We could spend a whole nother session talking about the reasons behind that, but it's partly to do with a shortage of new cars, and that's partly a hangover from the COVID crisis. Again, maybe one for another day. But yeah, so those are some of the things that where they're. But clothes prices, price of clothing and footwear, that's gone up pretty sharply as well. Sam, you're right. Some things will have gone down, but I tell you what, there aren't many.
No, absolutely. And what I just wanted to do was to just take a moment, just sort of have a little quick scan through some of the comments, because people have been commenting. Thank you very much. We've got a Diane Roberts here. Says the government should step in and put a stop to all of this. Poverty was bad enough, and poverty is going to get a lot worse. Government step up and protect the people of this country for a change. Diane, I think you can agree more. There are some government help schemes which are relatively new. You've probably heard about them, but I think one of the biggest questions that we get at the moment every single day on the money team at the Mirror is, what help is out there? When am I going to get it? And when am I eligible for it? That's probably 80% of the emails we're getting at the moment. So just for anyone who's wondering, towards the end of this call, we will just do a very brief recap of some of the help schemes that are available for you, because things are changing very quickly in terms of when people might expect this money, that kind of thing. So yeah, we'll definitely get into that. So Luke Kerr says, can we stop calling it inflation, start calling it price fixing or price gouging? Their profits haven't dipped. In fact, they've increased. I assume that here what we're really talking about, Luke, is kind of energy prices, and and I think the government has got it in for some of these energy companies, and they want to change how they kind of work out their kind of pricing structure. But thank you everybody so much for sort of chiming in. I know there's a little bit of kind of hot debate in there from supporters of political parties. We don't always support on the Mirror. Yeah, you're very entitled to your view, and I notice people are quite enjoying this kind of chat. Please do feel free to sort of comment, subscribe, ask questions. We'll do our best to answer them throughout the call. So we've spoken a little bit about what inflation means for your shopping. And your kind of household bills, but let's talk a little bit about what it means for your money. We'll start with wages, and then we'll kind of get into personal finance, because there's quite a lot to get into there. So Graham, obviously costs are going up. What's happening with our wages, please?
Well, this is a red hot topic. I mean, inflation is essentially your outgoings. The flip side of that is your what you've got coming in, your income, and this is, as I say, a huge topic at the moment. So inflation, as we know, over 9%, predicted to maybe hit 10, even 11% in the autumn. Now, average wage rises are, well, you tell you what, you'd be darn lucky if you're getting anything like that. So basically, the average wage rise at the moment is about just over 4%, and I would say big alert, that's an average. So a lot of people who'll be watching, who'll be viewing, tuning into this will be saying they haven't maybe had a pay rise at all, or it will be less than that. 4%, as I say, is the average. That's what the Office of National Statistics says, 4.2%. But in the private sector, it's generally been higher than that. But in the public sector, it's only something like 1.5%. And what does that mean? Right, what it basically means is unless you're getting 9% or more now, you are getting a real terms, that's what it's called, a real terms pay cut. And that is why we are seeing so much industrial action or unrest within companies now, companies and the public sector. And of course, the biggie at the moment is the rail dispute, the rail strikes, although, you know, it's certainly not in isolation. I am doing, we at the Mirror are doing a huge amount on this at the moment. And I tell you what, in terms of the comments, I'd love to hear what people have got to say about their experiences of pay rises and what they're getting. Yeah, that's the other, that's the flip side of the coin, is people's incomes are not going up anywhere near as much as inflation.
Absolutely, and you know, it's a very sad thing to say and to see. Yeah, as Graham mentioned, you know, we're very keen to hear your experiences of this. It's the kind of thing that we write an awful lot about, and we want to write more about. So, you know, please do feel free to get in contact with us either in the chat here, or you can contact us, you know, directly at the Mirror, and we'll kind of make sure that we try to hear you out. Now, obviously, we've spoken an awful lot about how inflation kind of affects you at the supermarket checkouts. Let's talk a little bit now about how inflation affects your personal finances. So it's worth having a bit of a recap, because inflation, you know, for many years, it's not actually been that high, and people maybe sort of slightly start to lose sight, especially perhaps the younger kind of generation. They lose sight of, you know, what high inflation really means for them. The first thing to talk about really is that inflation will affect the spending power of any spare cash that you are lucky enough to have. So if you had £100 and you put £100 under your mattress for a year, and inflation is 9%, the spending power of that £100 in the real world will be more like £91, because it will have fallen in value by roughly 9%. So in an ideal world, savers could put their cash into a savings deal, paying an interest rate that's higher than inflation, you know, meaning that the spending power of their cash would grow over time. And in the past, this was, you know, actually how things worked. If you go back several decades, a savings deal could easily pay, you know, 13, 14, 15%, even more sometimes, quite comfortably above inflation. But also for very many years, savings rates have been quite low. And that's because another figure has been quite low, which is the Bank of England base rate, which is what a lot of, you know, is factored into the cost of savings deals. So whilst, you know, savers at the moment, there's a little glimmer of hope, which is that because the Bank of England have been putting base rate up, which is what we covered in the video last week, the Facebook Live last week, savings rates have started to tick up. But unfortunately, because inflation is so high, there are no savings rates which come close to beating inflation. So the very, very best savings rate on the market at the moment pays you 5.02%. That's actually a current account, which is also quite unusual. These are strange times we're living in. And there are an awful lot of strings attached to that. I'm not going to go into all of the details with it, but yesterday we wrote a piece kind of talking about all the best savings deals on the market, and we're going to pop a link to that. We've popped a link to it in the comments, and we'll do that again just so that it's kind of, you know, it's there and it's fresh. A lot of people would sort of look at it and go, well, if savings rates, you know, they're not beating inflation, what's the point? I think there is a value to saving, you know, if you're lucky enough to be able to save, even if it's a couple of quid, savers shouldn't lose heart, because if you put it into some sort of deal, paying the best rate that's possible for you, it does mean that you still offset the way that inflation is eating away at your cash. And savings is very much a game of inches. So over years and years and years of getting into that kind of habit, you know, you will be in a much better position than you would be if you sort of just ignored it and kind of put your head down and said, you know, I'm just going to keep it in my current account where it's not earning any money at all. Now, it's a little bit more complicated when we talk about pensions. So inflation can be both bad news and good news for pensions, and I'm going to explain where that is. So if you're working and you're saving into a pension and you're not yet retired, your pension is probably growing in the region of 3 to 7% a year, something like that. So if inflation is higher than that, as it is currently, obviously 9.1%, what that means is the value of your pension pot is sort of being eaten away for the period that happens. But the only kind of silver lining with that is that the value of pension pots over time pretty much do always rise. So it's best to stick with it. Don't change anything and hope that inflation starts to dip too. Some people with private pensions, so workplace pensions perhaps, or pensions that they've set up themselves, are lucky because they'll have pensions which are linked to inflation, to CPI inflation, which is what we're talking about today. If you're really, really lucky, you'll have a pension that's linked to RPI inflation, which is even higher than CPI. Now, most of the people that have these kind of pensions, they tend to be kind of older workers, often people who worked for big companies like BT, Marks and Spencer, Ford. Quite a lot of the kind of old manufacturing industries will have these kind of very, very generous pensions that are linked to a higher level of inflation. Unfortunately, the government does plan to effectively axe RPI from 2030. So you'll get smaller pension increases from that point. But the overriding point is that some pensions are linked to inflation, various forms of inflation, which means that you are effectively protected, even if inflation is at an almost record high, which it is now. The other big the other big pension, which I've obviously not mentioned, which is an enormous subject for a lot of mirror readers, is the state pension. So there's also some incredibly good news there, and that's thanks to something called the triple lock. So this is a government promise that the state pension will rise every year by the highest of 2.5% earnings growth or inflation. Now, as Graham mentions, earnings growth, not likely to be extremely high, but the kind of the big hope here for state pensioners is that inflation is high in September of this year. Because if we get to September and inflation is really high, whatever it is in that month is how much your state pension will increase by from April next year for a whole year. So it looks like, we're going to kind of get into talking about the future of this and what might be coming down the pipeline. But it does look like the inflation may stay high for some time. So the kind of the silver, but then the Bank of England seems quite confident they'll be able to get it back under control kind of in the future. And again, we're going to get into some of this. But the big takeaway for state pensioners is that if inflation stays high through to September, that at least your state pension will increase by that amount next year. And that will be quite a big comfort for an awful lot of people in retirement. So Graham, after much kind of signposting there, I just wanted to ask the question, what is the likely future for inflation? The big question really for a lot of readers, how much more am I likely to be paying in the future, and do we know when this will end?
Yeah, well, certainly the talk is, and I think we referred to it a little bit earlier on, that the Bank of England anyway thinks that inflation will peak in about October, so a little over when we talk about September, and that's because we've got this price cap for energy which changes twice a year at the moment, although that might change. That's expected to go up in October, and that's why we're likely to see this peak of about 11%. It then should decline. So you're right, Sam. Actually, when the state pension goes up next April under this current plan, it could be that it goes up by quite a bit more than the rate of inflation in April next year. Nobody really knows what the rate of inflation will be come next April, but certainly the plan is, and that's partly why the Bank of England has been putting up interest rates, is to try and bring that down by then. So it could be that we're in a situation come next April where pensions are going up by a fair bit more than inflation at that time. However, of course, in the meantime, pensioners are, like everyone else, facing a big shortfall. And while pensioners, on the state pension anyway, will benefit, there's a big question over why the rest of the population, or those who are working, shouldn't be getting big pay rises sort of along those lines. The argument is, it's been from the government, is that, well, if you put up wages by a significant amount, that's going to fuel inflation. So we'll have higher inflation for longer, which begs the question, well, if you put up state pension by that much, that's going to drive inflation. They argue these things are too different. They're two different things, but that's one of the big debates at the moment.
I'm with you. No, thank you very much. And I just wanted to just take a quick scan of the comments. Now, there's a comment here from Susan Elizabeth, and I think this comment, it really hits the nail on the head, and it's something which we hear about quite a lot at the Mirror Heating. So she says, we're actually the only comment, isn't it time heating oil was capped? 18% of people in Wales rely on oil heating as there is no gas in many areas. Heating oil prices have far more than doubled. People rely on this for hot water as well as heating. So, Susan kind of hits the nail on the head. And I think this point is something which a lot of, you don't see an awful lot of kind of stories written about this point. My theory is that, it's a bit like stories about trains as opposed to stories about buses. I think it's fair to say a lot of journalists they're in the sort of, they're in the sort of London bubble slightly. And they're maybe unaware or they've forgotten that for an awful lot of the country, they're almost off the grid when it comes to, they're reliant on, oil tankers filling up the big oil tanks to sort of power their heating. And so you tend to see an awful lot of stories about, things that affect the journalists, but not a lot of stories sometimes about things like bus services, which are obviously hugely important in rural areas, and heating oil. And what we're saying here, Susan Elizabeth, there's been a huge increase in the price of heating oil, which has basically been allowed to rumble on with almost no kind of input from the government. Not only that, but people that kind of rely on this, there's no price caps for heating oil. There's a market in which providers compete with one another. But at the moment, although energy bills are high, there is a kind of a government sanctioned price cap for the average use of energy. So the average house using kind of electricity and gas shouldn't pay more than a certain amount per year. Their bills are being artificially kept down. That doesn't exist for heating oil. So to the best of my knowledge, there's been no kind of government help for people who are in that position. And Susan, I feel my parents are in are in that position, and it's a definite pain. It's a definite pain for them too. So thank you very much for bringing that up. And maybe we'll.
Yeah, and I'll tell you another thing, Sam. Actually, you're right, definitely right to point out. And the other thing is, which is not capped, is in many cases energy bills for companies, and we don't really go into as much detail as we do perhaps with the household price cap. There is no price cap for most companies, and they've seen their prices go through the roof, and ultimately companies are the ones who are employing people and paying their wages and having to find the money for additional pay rises, etc. So just thought I'd make that point for any small businesses that might be tuning in at all.
Yeah, no, absolutely. I think it's a really good point. And my sort of personal feeling, I've got not a lot of evidence to really back this up, is that a lot of energy companies, when they saw that energy bills were increasing, obviously a lot of them went out of business as a result of the price cap, because it was costing them more to supply power than they could charge people for it. And I think a lot of small businesses especially think that they are being overcharged as a result of energy companies being unable to charge consumers more for their household energy. So it's definitely a massive issue. Now, we've spoken an awful lot about inflation, the cost of things going up. Let's just talk a little bit about some of the help that's available for people who are struggling. So the government have, over the course of the last few months, brought out sort of an overlapping series of pots of cash, basically, which are available for people in certain situations. So the big one is £650 for people who are on means tested benefits. That will come in two chunks. It'll be split into two bits. The first one coming in July, and the second one coming at some point in the autumn. There's also a £400 payment towards energy bills. That's for all bill payers, anyone with an electricity meter. There's also a £300 payment for pensioners and a £150 payment for disabled people, and that will be coming in September. We think late September, unfortunately. Now, there's a couple of little caveats just to very briefly kind of run over here. So the first one is that if you get housing benefit and no other benefits, and someone actually was very kind enough when we to sort of email in about this and put a question forward on this ahead of this call, but yesterday. So just to sort of answer that question on the call, if you get housing benefit and no other benefits, it looks like you won't get the £650 payment that the government is otherwise giving out for people on means tested benefits. And this is because, somewhat embarrassingly, HMRC can only track you down to give you the money if you claim housing benefit and some other sort of benefit. So if you claim housing benefit and nothing else, the government can't find you to give you the money. So this leads us on to one of the other big pots of cash which is available, which is called the Household Support Fund. So this is a £1.5 billion pot of cash which the government is handing out through local councils. So for anyone who's hard up, it doesn't have to have anything to do with housing benefit. For any families that are struggling, the advice is contact your local council, ask about the Household Support Fund, ask how you access it. They will probably have several forms and criteria that you've got to meet, because you've got to prove you deserve it. Basically, that's on you to prove that. And that cash is there. But the other big pot of people who can kind of use that are people who claim housing benefit and nothing else. The government has said, oops, we've realised there's a pot of people out there who can't get the £650. What can we do to help? Send them to the Household Support Fund. So the other kind of big thing to mention is that you will wait longer for the £650 payment if you get tax credits. So that's child tax credit or working tax credit. Here you will get your first payment in the autumn and your second payment from the winter, as opposed to your first payment in July and your second payment in the autumn. And this delay, also somewhat embarrassingly, this is a kind of a sort of a government process issue. They don't want to pay you twice. So because tax credit is being phased out and replaced by universal credit, if you claim tax credit now and then you get swapped onto universal credit, the government might pay you twice. And they want to avoid the possibility of that happening. So what they're going to do basically is pay you later once you've kind of migrated over. So they're sort of unfortunately punting, a sort of cost sort of later down the line. Now, appreciate that we're sort of out of time now. We've got to the end of the half-hour session. I hope you found that useful. We're back here every Thursday at 1 p.m. with future Facebook Lives. Every single week, we try and cover a different aspect of the cost of living and answer your questions. So one thing I did just want to do just before we say thank you and good night is to just sort of pass on some email addresses which you can use to get in contact with us. I appreciate there's been an awful lot of kind of comment that we haven't been able to get to. So I'm just going to give you an email address which the money team here at the Mirror monitor. So it's mirror.money.saving@mirror.co.uk. That's mirror.money.saving@mirror.co.uk. Any kind of comments, questions, anything you think that we should be looking at but we're not, feel free there it is, just popped up on the screen there. Feel free to get in contact with us and we'll do our best to kind of help you out or look into something if we can. And I know that Graham, you're also you're also kind of quite keen for people to get in contact with yourself.
Yeah, absolutely. Yeah. My email address is graham.hiscott@mirror.co.uk. And it really is great to look at the feedback we've had today, the comments we've had today. It gives us a fantastic insight into what people's concerns are and thoughts are, and as you say, to get some more comments and feedback would be great as well. It would definitely help. So yeah, that'd be great.
Okay. Well, thank you, Graham, so much for your time, and thank you everybody for tuning in. And you can catch us next Thursday at 1 p.m. Thank you very much.